Are you wondering what the best property strategies are for investing £50,000? Or perhaps you're looking for strategies that deliver high returns for relatively low risk? Well, this video is made perfect for you. In this video, we detail 6 property strategies to give you a flavour of what we can do with £50,000. So watch this video all the way through to the very end to find out what my favourite strategy is and an absolutely killer tip on how to supercharge this particular strategy. Now, this video was requested by a subscriber, so if you do want me to make a video on a particular topic, please comment below. So before we get into the main part of this video where I detail and go through and explain the 6 profitable property strategies to embark upon, it's important to know that I have experience in all these strategies. However, I've narrowed down, I think, in my opinion, the most lucrative and the most profitable to these 6. So let's jump straight into it. So coming on to number 1, and again, this is no surprise for anyone that follows the channel, and that's buy-to-let. So what is buy-to-let? Very briefly, buy-to-let is where we buy a property and we rent it out. It's as simple as that. And I would say it's the most popular property strategy in the UK. Now, the amazing thing about buy-to-let isn't so much the income, it's the capital growth. It's how much money you make in the long term by holding this particular asset. And that's something that's really underplayed with this particular strategy. So, if you're buying a nice 2 or 3 bed semi-detached property in an area with strong fundamentals, and what I mean by that is a high percentage of owner occupiers, low crime, great employers, good schools, and great transport links, then you'd like to think that's a particular area where the prices are going to increase in line with average, if not above average, in the UK over the long term. So us as investors, all we have to do is maintain and run this asset, but sit back, relax, and let capital appreciation work its magic. I can't think of many easier ways to make money in the long term. If you are getting value from this video, please do consider liking it. The button is somewhere below. What it will do is it will promote this video to other like-minded individuals, and hopefully they'll be able to get some value from the video. So the second strategy on how we can profit from property is the HMO route. A HMO is defined as a house of multiple occupation where 3 or more unrelated people live in the same dwelling. So we could be letting out a house to a group of students, maybe 4 students come together for the academic year, or in fact we could be letting a house on a room basis to say 5 young professionals, and they all have separate contracts. So they're the kind of ideas when we're letting HMOs, and they're the different tenant types. The great thing about HMOs is they pay you handsomely in the short term. Your income is maximised. Yes, you have to pay for those running costs, but even considering that, you will maximise your income. But one thing you necessarily don't get with HMOs is capital growth. Typically speaking, the growth you get in HMOs is directly relating to that income. So if the income goes up, great, the value goes up. But if the general property prices in that area go up, the value of the HMO doesn't necessarily go up, right? So this is why over the several years I've been moving away from HMOs. In fact, I've sold all my HMOs now, simply because I wasn't happy with the fact that I was leaving so much money on the table by losing out on capital growth. Now, very briefly, with HMOs, we have 2 options. We can buy, first of all, a ready-made HMO which has C4 planning use. It's unlikely we're going to be able to add value because we're buying ready-made. Or in fact, we could look for an opportunity, a C3 property that we can turn into a HMO C4 property and again profit and benefit by adding value and increasing the income of that property. Article 4 prevents us from turning a property from C3 to C4 without full planning permission. And typically speaking, if we're turning a property into a HMO, there's money to be made through the value add. The third profitable property strategy are developments or refurbs. So, we could be just refurbing, say, a 2-bed semi that's in need of modernisation, or we could be building a brand new property from scratch, from the ground up. Of course, whichever route we're taking, the whole idea is to add value. So what do we do once we've added this value? Well, we can finance or refinance and take out some of their equity. So let's just say we've added £200,000 worth of value because we've built a brand new property. Well, we can go to the bank if we want to keep it and take out, say, £150,000 and move that into the next deal. Another option, of course, is to sell. So we can sell and release our full equity in the property and again move on to that very next deal. So to recap, with developments or refurbs, we're value add. We're adding value to the property. We can then finance and pull out some of that additional equity, or we can sell and release our whole equity in the property. The fourth property strategy is property flipping or property trading, where we're buying and selling property. Now, when we're in a rising market, this is quite a lucrative strategy. The risks and the downsides are far less than operating in a market that's somewhat stagnant or a market where property prices are declining. Now, of course, when we're with flipping property, it's really important to incorporate and account for all the costs to flip a property. So of course, not only do we have the buying costs, the stamp duty, legal fees, maybe a mortgage broker fee, but on the selling side, again, we've got similar fees, legal fees, estate agent fees, vacancy and void fees. So for example, if that property is vacant for 6 months, we pay the council tax, we pay the bills, etc. So make sure you account for all the fees and all the costs when it comes to buying and selling property. So the fifth property strategy is to add value by planning permission. So for example, we could be buying a plot of land which has no planning. We could then obtain the planning ourselves and sell on the land at a higher price, and we pocket that margin minus the planning related fees. That's one really good option. Again, you can do this to existing dwellings. So maybe we're buying a house, it's a 2-bed or a 3-bed house, and we've actually got planning permission to increase it to double the size of the property. Maybe there's a huge garden and we can extend into the garden, and we can either do that ourselves and profit from such exercise, or we can sell it on to a developer. Now, the really nice thing about planning gain is you don't have to get your hands dirty. It's essentially a paperwork exercise. So you can be looking for deals where you're not going to get your hands dirty. You just know that you'll be able to profit from that planning gain, and by having really good contacts with planning consultants and architects, you'll be able to make that happen. So the last and the sixth property or profitable property strategy that I have to share with you here today is commercial property. Now, with commercial property, that's a very broad generic term. There are so many things that encompass commercial property, but with £50,000 you could still buy a commercial property of some kind. And again, you could be renting this out for an income and be buying it with a mortgage in the first instance, or again, you could have other ideas for the property. Maybe you could put a bit of money into the property and drastically increase the value. So they're the 6 property strategies I have here for you today. And before I summarize them and go over them, what is the best strategy? If you ask me, if you ask someone, you'll probably get a different answer, but I can only share my opinion and my experience. And my experience is the buy-to-let strategy, which I place number 1, is by far, in my opinion, the most profitable strategy. It's the best blend between a strategy that is somewhat passive, but pays you very generously, not only in the short term, but in the long term too. Now, I promised you a killer tip on how to supercharge this particular strategy, so let me explain. So if we just embark upon a normal buy-to-let strategy as it is, it doesn't result in any spectacular returns. If we're going out and we're buying property for market value and we're then renting it out, yes, it may give us a good income, it may give us an income that's maybe in line with average asset types, but it's not really going to generate and supercharge our wealth in the short term. So how do we do that? Well, my particular version of the buy-to-let strategy is as follows, and that's combining buy-to-let with below market value. So we're buying properties below market value at a discount using the buy-to-let strategy. And what this allows us to do is, say we're fixing our mortgage for 2 years, and in 2 years' time, we can refinance, pull out loads of cash from that particular property, and that cash we pull out, we can invest in our very next property, and we can simply rinse and repeat the process. Now, I've gone through an example and I've talked about how to scale a property portfolio in depth in my recent video, how to scale a property portfolio in 5 years or less. So I'll link that somewhere above my head, and we'll end with that too, and also I'll put a link in the description. So to summarize, we've discussed 6 profitable property strategies. I'm going to look to my laptop to reel them off to you right now. The first is obviously buy-to-let. The second is HMOs. The third is developments. The fourth is flipping property. The fifth is adding value by planning. And the sixth is commercial property. So, do you have a comment? Do you have a question? Well, please do comment below. As you know, I respond to all very nice questions and comments personally. So I hope you got value from this video, and I sincerely wish you all the very best with your property investing journey. Goodbye.